Hi guys, I hope that you're all doing well. Today's lesson is about the weighted average method under grade 12 inventory. We have question 1, Cricket Mania. The following information was extracted from the financial records of Cricket Mania, a business owned by J. Callis. The business sells one type of branded cricket bat. They use the perpetual inventory system and the weighted average method to value their stock. The financial year ends on 28th of February 2026. So they use the perpetual inventory system, meaning whenever something is sold, they update the inventory. Okay, so we have our information, we have our stock balances. On the 1st of March 2025, we have our opening stock. Okay, we have 150 units and 650. Let's try to make sense of these figures. Let's say 150 times 650, we get 97,500. Okay, so they've already done the calculations for us. This is the opening stock. So the closing stock, meaning the items that we hadn't sold, what we still have. We have 210 units. So we don't have the unit price. We also don't have the cost price. So we have to calculate that. Okay. So let's move to the second information. We have purchases and returns. You have our dates, May, October, January. Okay. So you have our purchases, you have returns, you have purchases, you have purchases. Okay. So number of units for the 15th of May, we had 400 units and the unit cost was 700. So let's try 400 times 700. We get 280,000. Okay. So that means they've done the calculations. Now on the 20th of May, we had returns from the 15th of May from here, things that were sold there. Okay, we had returns. Let's check how many returns we had. 20. So the reason it's in a bracket is that they want to show you that you're supposed to subtract your returns. So we have 20 returns. The unit cost is 700. Let's try 20 times 700. You should get 14,000 rand. Okay, so that is accurate. 12th of October 2025, we had purchases, 550 units. So let's say 550 times 750. We get 412,500. So guys, notice how when I get my question paper, I don't rush to look at the questions. I just take my time. I try to familiarize myself with the tables. I try to make a few calculations, and I notice things like returns being subtracted and so on. So when you get your question paper, don't rush to answer everything. On the 18th of January 2026, we also purchased other items, 320 units. So let's say 320 times 800. We get 256,000. So that makes sense. Now we have our totals. 1,250 means it's, let's say 400. In this case, it's a subtraction as they are returns. They use the bracket. So it's 400 minus 20 plus 500 plus 320. I don't get 1,250. Let me punch this in my calculator again. I have 400 minus 20 minus 550. Excuse me, plus 550 plus 320. Oh, I get 1,250 units. I made a mistake. So that's okay. Now we have our unit cost. Then we have our total cost. In our calculator, let's punch 280,000 plus, no, it should be minus 14,000 plus 412,500 plus 256,000, 934,500. Okay, so that information makes sense. Let's go to 3. We have carriage on purchases. Carriage transport costs is paid in cash and is not included in the purchases above, meaning this information or this entire table does not include our carriages. Okay, so a flat rate of 40 Rand per bat was paid for all transport costs on purchases throughout the year. Note, carriage was successfully claimed back refunded on the 20 returned bats. Let's look at other information. We have sales and stock take. The total sales for the year, 1,170 bats were sold at a fixed selling price of 1,350 each. A physical stock count on the 20th of February 2026 revealed 210 bets on hand. Okay, let's look at our first information. 210 bets on hand. This has to be your closing stock, because those are the items that you didn't sell. What else do we have? The total sales for the year, 1,170 bets were sold at a fixed selling price of 1,350 each. Let's move to our questions. Questions, we have 1.1. State 2 reasons why a business might choose the weighted average method over the FIFO method to value their inventory. They basically want you to state the advantages of the weighted average, right? Why should you use the weighted average? Because it is simpler. And, the weighted average method is simpler and less expensive. Remember when we spoke about valuation methods like the specific identification method, we said that it might be a bit expensive and that businesses might need a lot of computers in order to constantly evaluate their method, right? So in terms of the weighted average, they don't need to spend a lot of money on equipment, because there are less calculations involved. They don't have to really specify different products. So another reason could be that it's less time consuming. It is less time consuming compared to having to track specific batches of stock, for example, the FIFO. So these are the two reasons that you could give. If you can think of any other points, just try to think whether your points make sense and whether they are valid. Try to compare the different valuation systems. So this could be an easy 4 marks, I think. Okay, let's move to 1.2. We're done with, yes, it's 4 points. We're done with 1.1. Let's move to 1.2. Calculate the total cost of carriage on purchases that must be capitalized to the inventory for the year. So let's go back to our information. We have our carriage here. Let's refer to this information. So they said carriage transportation costs is paid in cash and is not included in the purchase prices above. A flat rate of 40 Rand per bet was paid for all transport costs on purchases throughout the year. Note, carriage was successfully claimed back or refunded on the 20 return bets. So I think we might have to say 40 times our units in order to get the carriage. However, they said there were 20 bets that were returned. Here they stated that there are 20 bets. So they've already calculated the 400 minus 20 plus 550 plus 320. But let's just write our calculations. We'll say we start with the units, okay? Normally when we calculate carriages, we'd have to say, let's say we have 20 Rand as our carriage price, okay, the rate. So if we have 550 units, we'll say 20 times 550 units, and we'd get our amount. But in this case, we have to say 40 times our units. Now let's look at our units. We have carriage on purchases, meaning we have to start here at purchases. We don't have to include our opening stock. Okay, so we have to see our 400 units minus our 20 plus the 550, plus the 320. When we add this, we should get 1,250 units. But remember, they also calculated this for you guys. So you can just do all these calculations just to check whether the table is always accurate, but it's always safe to verify your answer. Okay, so it's 1,250 units. You have to take this 1,250 and multiply it with our rate, which is 40 per bet, the carriage on purchases. So we will say 1,250 times 40, which is our rate, right? And the answer will be 50,000. And there is a total cost on carriage on purchases. Now let's move to the following question. What do we have? We've done this, the carriage. 1.3, calculated the weighted average per cost. Calculate the weighted average cost per cricket bet on 20th of February 2026, around to the nearest cent. So our weighted average formula is, if you want to get the rate, it is total cost over total units, or whatever formula that I told you guys in the first video. So it's normally total cost over total units. So let's look at our total cost. Which components make up our total costs? Firstly, we have our opening stock, right, which is 997,500, So we have to say our opening stock what do we have? We also have our carriages or our net purchases. Okay, let's see, plus our net purchases, meaning all of our purchases, okay, plus our carriage. We have opening stock, purchases, and carriages. We also have sales there, but we don't need that information here. These three components make up our total cost. Okay, so we'll have, what is our opening stock? 97,500 plus our net purchases, which is 934,500 plus our carriage, which we calculated in the previous question. It's 50,000. In total, when you add these together, you should get 1,082,000, okay, as your total cost. So you can see that you just calculated a total cost. Now let's calculate our total units. Let me rub this off, but please make sure that you write that in your notes. So in terms of our total units, let's check. We'll say in the beginning we had opening stock, right? We just calculated the cost. Now for those costs, let's look at units that were related to the cost. We had to multiply certain units in order to get this 97,000 as well as that 934,000. So this will be opening stock plus our units purchased. Okay, so in terms of opening stock, we had 150 units. Then we purchased 1,250 units in total. We included these returns. To get to this 1,250, we said 400 minus 20 plus 550 plus 320, and you guys saw that it gave us 1,250, right? So you can just say our opening stock will be 150 units plus the units purchased in total are 1,250, and in total you should get 1,400 units as your total units. Now we both have our total cost and our total units. Let's substitute. Our total cost was 1,082,000 and our total units was 1,400 units. So let's see, 1,082,000 divided by 1,400, you should get 772 and 86 cents. Now this is the total cost of the, let me check, we've done this. This is the weighted average cost per cricket bet. Now let's move to the next question. We have 1.4, calculate the value of the closing stock on 20th of February 2026. Let's look at our table or our information. There's a closing stock, it's 210 units, right? So we have to see our 210 units times which cost price do you think we should use? Do you think we should use this unit price, or that one, or that one, or that one, or that one? Because you just calculated your weighted average cost per cricket bet, that is the information that you should use from now on. So you have to say the 210 times, in the previous example we got 772.86 as our weighted average. Okay, from now on we work with this weighted average. So it's very important to make sure that you get the right figure, otherwise all your calculations will be wrong. So you have to say 210 units times 772.86 that we got from the previous example, and we will get 162,360 cents, or 0.6. And the other thing that I should note is that in the previous example I saw that they said round off to the nearest cent, but I didn't want to round it off by saying 772.9, as we'll do my calculations, and rounding off at this point is not really that wise. However, in your exam you can just round it off if they tell you to do so. Now let's look at the next example. We have calculate the following figures for the financial year ended 28 February 2026. We have total sales or revenue. Remember, I told you guys in the previous video that when you ask for the total sales, this is basically the money that you made from selling something. So you're getting money, that means it's your revenue. That is why there's a forward slash there. Let's look at our information. We have total sales. We look at the information related to sales. The question says total sales. And here we have sales and stock take. So that is most probably the information that we need. Total sales for the year, 1,170 bets were sold at a fixed price of 1,350 each. So we want to know how much money we made. So this will be 1.5.1. Let me verify. Yes, 1.5.1. Our sales, we had 1,170 bets that were sold. And they were sold at a selling price of 1,350. So this should be 1,170 times 1,350. When you punch that in a calculator, you should get an answer of 1,579,500. This is the money that you made from selling the cricket bets. Now let's move to the next question. We have 1.5.2 of the calculate our cost of sales. Now remember, cost of sales refer to the money that we had to spend in order to sell something. Okay, so let's go to our sales information. Here we sold 1,170 bets. So we can take that 1,170 and multiply it with the weighted average cost per bet that we calculated in 1.3, which was 772.86. Okay, there's a different way in which you can do this, a very long method. However, I'd recommend that you use this one just so you're certain about your answer. So 1,170 times 772.86 should give you 904,246,20. And that is your cost of sales. You just look at the units that you sold. We sold over, let me check the sales. We sold exactly 1,170 beds. So you multiply it with a weighted average cost per cricket bed that we calculated. You can also write that as a formula in your weighted average notes. Let's look at the next question. You're done with cost of sales. You have 1.5.3. You have gross profit. And remember, gross profit is just sales minus cost of sales, or total sales minus cost of sales. So we have our sales, we calculated it in the total sales, and we have a cost of sales that we calculated in 1.5.2. So our sales was 1,579,500 minus the cost of sales that we calculated, which was 904,246,20. Okay, 904,246,20, which is 675,254. This is your cost of sales. Now let's go to the next question. You have calculated the gross profit percentage on turnover. So they said that the gross profit percentage on turnover, in a bracket, there's sales. Remember the formula, you just look at what you have. You have gross profit on sales, meaning on top of sales, right? Then there's a percentage, so you have to say times 100. Now let's substitute. Our gross profit is 675,254 over, you have our sales, and we said that our sales are 1,579,500 times 100. So when you punch that in a calculator, your answer should be 42.75%. Now let's move to the next question. We have markup percentage achieved. So our markup is gross profit. Remember, you should know the formula. Over cost of sales times 100. Now let's substitute. You said that our gross profit is 675,254 over our cost of sales, which is 904,246,20 times 100. Your markup percentage should be 74.68 when you round it off to 2 decimal places. And let's move to the next question. We have calculate the inventory turnover rate, meaning how much you bought and sold our inventory in a financial year. Okay, so remember the formula is cost of sales over average inventory. Okay, so we already have our cost of sales, right? Because we calculated it. However, we don't have our average inventory. So let's calculate our average inventory. Your average inventory is the opening stock plus the closing stock over 2. So what is your opening stock? Let's look at our information. There's your opening stock. It's 97,500, the value of your opening stock. Plus your closing stock that you calculated at 1.4, and it was 162,360 cents over 2. And when you punch that in a calculator, you should get an answer of 129,930 cents. This 129,930 cents is your average inventory. Now let's substitute this there. I'm going to erase this information. This will be your cost of sales. Remember, cost of sales is 904,246,20 over your average inventory that you just calculated, it's 129,930 cents. So when you punch that in your calculator, you should get an answer of 7,08. And remember, inventory turnover rate, they told you that it's expressed in number of tons per year. So you'll see times per year. Now let's move to the next question. We have internal control question. The owner is concerned that stock might be missing. Prove by means of a unit calculation whether any stock was stolen. Okay, so how do we check this? Let's start from the beginning. They said that we should check the units, okay? In terms of the opening, meaning what we had at the beginning, we had 150 units. And there's your 150 units. And let's look at before we even go to closing stock, let's look at our purchases. We had 1,250 purchases. So let's add that 1,250. This is what we have. Now let's check what else do we have. We have carriage. We also have sales. So we sold 1,170 beds, meaning we no longer own 1,170. They left the company. People bought those units. So let's say 150 plus 1,250 plus 1,170. You should get 230 units. So that means these are the units you're supposed to have. These are the units that you expect. So we may say expected closing stock. This is what you think you should have because of the calculations, okay? Now, we have to compare this with what we actually have. And where can you find that information? Let's start at the beginning. Here we had opening stock, meaning what we had in the beginning. And purchases took place as well as sales. Now we're left with closing stock. That means this is what is left. How many units do we have? 210. So let's say 210. This is your closing stock. The one that you're given, okay? And this you just calculated. Let's say 230 minus 210. 230 minus 210 is 20. So that basically means that 20 units were stolen or are missing. So let's say 20 units are stolen or missing. You're supposed to have 230. However, the stock count is 210. 20 units are missing. So you've proven that. We've just answered that question for 5 marks. Let's move to the second point. We have suggest 2 internal control measures the owner can implement to prevent stock losses in the future. What are different things that you'd recommend to a company so that theft doesn't take place? You could say things like install CCTV cameras in the storeroom. Alright, that way they can monitor who enters and who leaves. Then they could also regularly count their inventory, right? So let's say conduct regular and unannounced so that people don't know. Physical stock. Conduct regular and unannounced physical stock counts. Yes, what else? Yes, I think they just said 2. So those are the 2 points that I can think of. They could train stolen cameras or do regular inventory counts. Those are the 2 ways in order to ensure people don't steal any inventory. And that is all under the weighted average. I hope that you guys enjoy this lesson. I'll see you in the next one where we try different question papers. If you have any questions, as always, you can just drop a comment. And if you want to have access to this document, it also has a memo. You can send us an email and try this one out. We also have other documents. And by the end of this lesson, you should know most of the subtopics under inventory. Please check out the description for more information about this. Thank you for watching. Please like and subscribe.